Breaking news! Breaking news! Right Capital has updated the taxes. Yay! For the one big beautiful bill. So let's check it out. We're going to look at Diane's sample here. And we're going to show you Diane's sample. And we're going to show, are we going to show you Diane's sample? Yes, we are. So good stuff, Right Capital. So we're going to show you Diane's sample 63 today. 63, all right? And she has no income. What she's going to do is she's going to take, I can't remember what it is. Yeah, no, she has $100,000 of income. I forgot. Let's see. We're going to look down here at cash flows. Yeah, she got, we're going to do with Diane. We're going to have her pull $100,000 out of her IRA each and every year. All right. And then I'm going to show you. So here's 63, 64, 65. That's for the increase in standard deductions. All right. So we're going to go to the tax form. 20. You don't need to do anything. So I don't need to do anything for you. It's already set up in your software, which is great. So nothing you need to do, nothing I need to do. Thank the good Lord. I won't get any more emails. Woo! I was getting lots of emails. Oh, and I get it, man. I would have emailed you too. But I don't have to, it was just dozens of emails. Like, dude, I can't keep track. And now it's done. I don't have to fix anything. It's great. So here's 100. Let's go to 2026. We'll show you Diane's going to take 103 out. 100. I didn't adjust inflation. She's taking $100,000 out of her IRA. You can see $100,000 on line 4B, taxable amount. It flows down here to line 9. All right, $100,000. Flows down here to line 11 for AGI, so $100,000. Has her standard deduction of $16,000, and her taxable income is $83,000. All right, so $100,000, $83,000 is taxable income because her standard deduction is $16,000. Everybody with me on that? So 100,000 minus 16,000 equals $83,000, and then her taxes are $13,000 on $100,000, which is a 13.192% effective tax rate. Now the following year she turns 65 in 2027. Still has a $100,000 distribution. Oh, look at her standard deduction. Look at this in line 12, $23,000 from line 12, $16,000. That's a $6,000 increase in standard deduction adjusted for inflation. So $100,000 in line 4B flows down to line 9. $100,000 flows down to line 11. $100,000. That's her AGI. Standard deduction is now $23,000. Her taxable income is only $76,000, whereas before it was $83,000. So you can see right there, she saved $7,000 of taxable income, which means she saved, her taxes are $11,471, whereas before it was $13,192. So $13,192 minus $11,471. She saved $1,700 right there in total taxes. Not too shabby, not too shabby. But Trump's tax bill only affects the rich. She saved that right there. So her effective tax rate went from 13.192 to 11.47. Now again, the software here, you'll see that's her marginal bracket is 22%, but her effective tax rate is a little bit less than half, a little bit more than half that. You can see her effective tax rate drops right here. They don't have it quite right there, but I just want to point out that the effective tax rate actually declines once she hits 65. Look at that. It goes from a 13 to 11.5. Not a huge tax hike, but 1.7 divided by 13.5, and that's a drop of 13% in her effective tax rate. It's real money, man. I mean, that's real money. If you don't want it, send it to me. But it's not worth anything. I'll take your crap money. I'll take your trash cash. Send it to me. I will be your trash man. Feel free to send me your cash. Anyway, nothing you need to do in there. It's all in the system. It's great. If we want to add Diane's sample as get her married. All right, so we got now Diane's got her hubby, so we're married. You can see her standard deduction is right there. Line 12, $31,000 in 2025. We go to 2027, and it's gone up to $48,800, basically $49,000. So it's gone up another almost $13,000 per person, roughly at that point. A serious tax saving. So when they're married, their taxes on a $100,000 distribution in 2027 is only $5,600. And when before they're 65, their tax on a $100,000 distribution is $7,600. I mean, again, that's a big savings, dude. $7,600 minus. That's $2,000 of savings. So $2,000 from the initial 2 divided by 7.6, that's a 26% tax savings right there. That's good. Right Capital has adjusted the tax things. You don't need to do a thing. You shouldn't need to do a thing. But the way you can check is just put yourself at 65 and see if it gives you an increase in standard deductions. And I think, let's go down here. So it's only for 4 years. So let's go to 2000. We should see that standard deduction drop. Yeah. So it's, yeah, right on. So it does drop in 2020. Yeah, 2029 it will drop again. So hopefully J.D. Vance will be the president, the dictator in charge, and say, no, we're going to keep the tax bill the way it is right now. That'd be great. All right. God bless. Love your thoughts. Thank you now.